I used to win big and then lose everything in one single trade. And I'm actually be telling you why 95% of people actually lose in the market. And this is not actually what you think. This is a different stuff entirely. I became consistent when I actually realized this particular mistake and corrected it. Now, I'm actually going to be sharing with you what I've learned that made me consistent. So I want you to stick with me so that you learn exactly how this goes. And I want to see you become a profitable trader. You keep doing this wrong thing over time, and in return it actually make you inconsistent. Now I'm actually going to be showing those of you also who think consistency is not easy. I'm actually going to be showing you the simple way to make consistency easy for you, and so that you can become profitable in the market. Now I'm actually going to be telling you what consistency means first of all, before I tell you those things that actually made me consistent in making profits. Now first of all, consistency is not about winning every trade. Now most traders actually tell you that what happened, you need a perfect strategy. You need to actually have that strategy that work 90% before you can actually become profitable in the market. But that is far from the truth. Now what is consistency? Consistency is you doing the same thing over time, like repeatedly over time. Either your strategy is like, if either you are actually on losing streak, either you are making profits, like no matter the condition, doing the same thing repeatedly. Now I'm actually telling you why I say consistency is not about either your strategy is 95% accurate, 100% accurate. Like that doesn't determine how you are going to win. Now take for instance my brother. My brother started Forex, and what happened, he started learning Forex and the rest. So he was putting in effort gradually. My brother had a strategy that was just 40 to 50% accurate, and what happened, he was still making profits consistently. Now let me tell you how this works. Now he actually, like, he loses, like, let's say for instance now he takes 10 trades, like 10 good trades. Then what happened, he lost 5, and what happened, he wins 5. You understand? Okay, now that very 5 he lost, okay, let's say for instance he funded $100 account, risking $10 on each trade. Now meaning he has 10 trades to take since he's using $10. Then what happened, he risked $10 and he lost 5 trades. Now the account is meaning what, $50. Now that means $50. Let's assume he made only one out of that, like only one trade. Now he makes like $400 with risking only $10. Now that $400 he made minus, like 400 minus the $50 he lost, what happened, he's still having $350 profit. So therefore it is not really about how accurate your strategy is. I see some people hopping from one strategy to another, hoping that they can get a perfect strategy, a 100% strategy, and that was what killed me in the beginning of my trading journey. I was using an indicator of that very particular time. What happened, I actually saw that what most people were succeeding using price action, using SMC, and what happened, I doubted my own indicator strategy. Now using price action, using SMC, using ICT, anyone, all those stuff are cool. There are people who make money with just indicator. There are people who make money with just trend line, like not price action, just only trend line. They don't know anything like zone, just trend line, and they are consistently profitable. So what happened, I was really making money with what, my indicator. But what happened, I saw that what other people were using this very stuff, and I saw that most people were becoming profitable using that particular SMC and price action. What happened, I shifted. Now when I shifted, what happened, I began to learn again and then again I saw that what happened, price action was not really cool. You understand, like it was not really cool, and I decided to use SMC because SMC gives more risk to reward. Like you get to make maybe 1:10 on a particular trade, while in price action I get to make 1:3. You understand? So I get to shift again, and in SMC you are more accurate. In price action, what happened, you're not really accurate. But still at that, in price action I was able to pass a prop firm, and I was able to make profit even in that prop firm. But at a particular point in time, when I began to have losing streak, what happened, I then changed my strategy to SMC. Now all this very stuff, all this very road I passed through was actually a very long road, making me move from consistency to inconsistency, to making profit again to inconsistency, because I was changing different strategy, looking for 100 percent working strategy. But that's not the case in the forex market. So consistency is not in winning every trade. Consistency is in the plan. If I have a 40% win rate, like, how am I going to have a edge, you understand, so that I become profitable? Now I'm still going to be diving deeper, showing you other points so you can get balanced and become profitable in the market, consistently profitable. Now, number 2, the foundation of consistency as regards to trading plan, your trading plan and your strategy. Now, when I actually mean trading plan, I mean your lot size, your risk management, your exits, your entry, your trailing stop. Where you actually get to make profits. When do you break even? When do you actually trail your stop? You understand? Like, all those type of stuff, you need to have them in place. I don't know if you're getting what I'm saying. You have to have a trading plan in place for you to do what? For you to be consistent. Now, I remember those days when I get to my phone, you understand, because I use phone mostly those days. What happened when I open my phone without trading plan? What happened? I just want to just start trading. And before you know what happened, you start seeing different stuffs. Like, you don't really know what to do. Like, you get to analyze the market quite alright. But what happened? You don't really know what particular stuff you are looking for in the market. You just analyze normally. Now, for instance, now I'm trading. I'm actually going to be looking for liquidity. I'm going to be looking for fair value gap. I'm actually going to be looking for my zone, break of structure. Like, I have them planned out, you understand, so that when I get to the front of my screen, I'm not going to actually make mistake. Now, it is so easy to forget your strategy when analyzing the market, and therefore what happened, you get to analyze in a different way, different from your strategy, different from your plan. You get to get out of a trade for your exit rule actually form. You understand? Some of you, we confirm this, that when you actually take a trade, you then get to see that, whoa, this wasn't my strategy at all. Like, it was something else. Like, I didn't follow my strategy. It was because you didn't have those strategy planned out. Now, the solution is that what happened, you get to write them down, and when you get to the computer, what happened, you read them out first of all before analyzing the market. Therefore, you know what you are looking for in the market. That's actually how it works. Now, let me tell you how this goes so far in working in your brain. Now, when I left price action to SMC, what do I actually discovered? I discovered that I was no longer seeing how to place a trend line, because I was no longer using trend line in SMC. Like, it was totally a different stuff. Like, I was not really seeing trend line again. What I was seeing was different stuff. Like, I was seeing break of market structure. Like, I was not seeing trend line. I was not seeing all those other blocks I normally use. I was seeing different IFC and a lot of stocks in the market, because my attention, my focus now is what happened is on SMC. Therefore, I will not be seeing what happened price action stuff. So you need to set those your plans so that when you get to the market, you are not going to see something else but exactly your trading strategy. Now, when it comes to your strategy, how does that help you in becoming consistent? Now, don't change your strategy no matter what. Like when you get to a mentor, when you actually get a mentor, what happened, and it's teaching you, stick with that particular strategy. Like, stick with it, just stick with it. If you are losing, what you can do to help you is this: you go back to your chart, back test, like run back tests. Now, this back testing has helped me a lot. I'm going to tell you the very good way for you to back test. Now, when you're back testing, you're not going to do partiality. There's some people that when they're back testing, they actually see that they're not supposed to put their stop loss at this very point, but we want to reduce their stop loss to see that what happened. Like, they make a very big risk reward, and they will not be believing that what happened when they come to a live account. That's actually how it's going to be. But the very truth is, you knew when back testing that this your stop loss was not so tight. It's actually going to be a bit bigger. What happened? You did not care. Like, you just reduced it. I don't know if you understand what I'm trying to tell you. And aside that, again, some people know that what happened, this is their TP area. When back testing, they know. But what did they do? They just increase the TP area, because when they're back testing, price actually did what? Price moved very long downward. So they try to prove to themselves that their strategy works so much and give them enough reward. But actually, they know that what happened, their strategy just gave them 2% reward, or 1:2 reward. They just discover that what happened, it gave them to 1:2 reward, but they increase it. Now when they come to the live markets, when they are trying to trade, they always want big profits because they actually deceive themselves while backtesting that this is actually how it works. I don't know if I get what I'm trying to say. And when they now start trading live market, it doesn't really work that way. Now it gets to that 2%, which is a normal profit area, and reverses from there, taking them out completely. But if they've backtested completely and they were, if they have backtested well, and they were sincere to themselves that this very stuff is only going to give me 1:2, and they stick to that, when it comes to very live trading, what happens? It's going to work that same way. That's actually the way they're going to trade. So when you're backtesting, don't be partial, like be accurate, like be sincere to yourself that this is how it works. So when you come to the live market, it works same way and exactly. Thirdly, discipline creates consistency. Discipline is consistency's best friend. Now, what is that discipline that you need to apply in order for you to see consistency? Now, it is journaling your trade, like journaling your trade and checking back, looking at where you actually made mistake and what happened, correcting it exactly. Another way also to be disciplined is by checking your particular time frame. Like for instance, I'm trading currency this in market. What time is it good for me to trade? You understand? I need to be disciplined to that particular time. For me, in my own country, it is what? It is 8 a.m. You understand? 8 a.m. to 4 p.m., 5 p.m. Once it's above 5 p.m., I'm not trading again. Like I'm done for that particular day, and that is what works for me. You understand? And I'm so disciplined to stick to that particular stuff, like to that particular trading time. You understand? Because I know that after that particular time, what happened? Spreads become bigger. And what happened? If I get to trade at that time, market probably may not move, and price may take my surplus, take me out of the trade. So therefore, you need to master the very time, you understand, that works for you. And aside that, I see some people want to trade and they are there discussing with their friend. No, I am so disciplined enough to wake up as early as 6 a.m., 7 a.m. at most, to what happen, analyze the charts. Analyze the chart when nobody is awake, when there is no noise, when my brain is still fresh because I've slept enough. And what happened? My brain is fresh and it can think so well, giving me the accurate result in the market. I'm disciplined enough to wake up at that exact time. You understand? No matter the stress, no matter what I'm like, no matter how I'm feeling. I don't know if I get what I'm trying to say. I wake up that particular time to make sure that what happened, analyze the market, because that is what works for me. Discipline removes emotion. When you are disciplined, it is not about how you feel. You do it regardless of how you feel. You wake up regardless of the time. You understand? And make sure you put in that work and do that very stuff. That's how disciplined you need to be when trading the market. Number 4 is emotion in killing consistency. Now, how does emotion affect consistency? Emotion makes you to do revenge trading. Emotion makes you to do what? To be scared when you want to enter the trade. And also, still on that number 4, setting small goals also causes emotion. Now let me take this one after the other. Fear of missing out on an opportunity. They call it FOMO, FOMO. Fear of missing out. Fear of missing out on an opportunity. That is caused by what? Emotion. Now that fear of missing out on an opportunity makes you to jump on a particular trade even when trade has right. Like let's say for instance, now you analyze the trade. Now the trade has gotten to your zone, but you're not there to take that particular trade. And what happened? The trade has already moved. It has moved. You know that what happened? You're not supposed to enter because your stop loss will be very far. You understand? But what happened? You don't care. You just want to enter because you don't want to miss out on that particular opportunity that is already moving. Not knowing that what happened, waiting for it to stay at your zone, it is better. Now how does this actually blow your account? It blows your account in the sense of, let's say for instance you are taking an $100 account, and from that your very zone, what happened? You are supposed to risk a one lot size on that your very zone. And what happened? Your stop loss is $100, like you are risking the $100, and from that very zone, if you use one lot, what happened? When it gets to your stop loss, you are going to lose $100. But now when the trade has already moved from your zone, you're not going to use a smaller lot size, because you'll be looking at, if I use a smaller lot size, if the team move, that what happen are like the gain will be very small. You just want a very big gain, and you're going to, like, most times you get to enter one lot size from that very long move. Like, it has already moved, but yet you still enter one lot size. And now when price just retrace, your account is blown even before reaching your stop loss. I don't know if you're getting what I'm trying to tell you. So FOMO, fear of missing out, actually kills. Now greed in the sense of, you know that you have a $10 account, like you know that what happened, you are risking small over time makes you consistent, but no, like you actually want to make it out so fast. You want to make that $100 to probably shoot your friend, like, you understand, you want to make that $100 probably to just do something so urgent. I don't know if you're getting what I'm trying to tell you. Then what happened? You just jump into the trade, and what happened? Before you know what happened, you've blown the whole account. Now, if you have this similar experience, please kindly comment, share with us how you feel that this very stuff of emotion has affected you in so many ways. Like, share other points so that other people get to learn in the comment section. I remember a very important point, and let me tell you how emotion also deals with you. It is the sense of you putting all your responsibilities on trading kills your like it brings so much emotion on you. Your feeding, you taking care of your mother, you taking care of your sister, the generator, the fuel generator, servicing the gen, like buying plates, your bed, your chair, like everything you're focusing on the market. Like, it kills you, like it makes you so emotional. You need to remove that particular stuff. Like, you need to get something else which supplies money, you understand, so that you can take care of those stuffs, those needs, you understand, in your life. You need to get another business. Like, it could be a job, it could be a small skill that you've learned that you can apply and work for somebody so that you make money, and therefore it doesn't affect your emotion, it doesn't affect your psychology. And what happened? You trade the market not looking for a short goal, but for a very long goal, because emotion comes when we are looking for a short goal. And that's the point I was saying I was going to tell you about. Like, emotion comes when you are looking for a short goal. When you set a goal that, okay, I want to make $10,000 in the market this month. Like, you just started Forex and you want to make $10,000 from the market. Like, you just start, like, not, you don't even have anybody to help you or something like that. You just want to make that particular money from $100 or from $50 or from $20. Like, you just want to blow. But that setting short time goal is actually killing you. It makes you to overtrade the market. Like, you get to want to enter plenty trades so that you can meet up to $10K in a month, meet up to $100K in a month. Meanwhile, your account is small. Meanwhile, you've not really properly learned how to trade, but you just want to make that particular amount of money because you set a very short goal. But instead, what you should do is set a longer goal. Over the space of this 1 year, over the space of 6 months, over the space of 2 years, I want to make so and so amount, and each day commit consistently to doing it with what? Discipline. Commit consistently to doing it very little by little. What happened? You get to see that what gradually you become so consistent that you make a lot of money, and it's going to be so surprising to you. Number 5 is the power of risk management. Most of us think that risk management is all about placing a proper lot size, but risk management is far more than that. Risk management, first of all, is one, placing a proper lot size, which is very correct. Like, understand, like, you get to see, if I actually get taken out by this trade, how much am I going to lose? Now, if I'm funding a $100 account, how many trades do I need to take before I lose that particular account? Like, you need to set all those down. You need to write your risk management plan. I don't know if I get what I'm trying to say. Like, now, if I'm funding a $100 account, how many times am I willing to lose this particular account? Like, how many trades am I willing to take to lose this particular account? Like, for me, my strategy is actually very good. Like, you understand, like a 60%, you understand, 60%, 70%, sometimes it could be 80%, sometimes it could be 60%, but more 60% risk reward. So what happened? I know that what happened, if I take 5 trades, I could win 3 out of 5. You understand? I could win 4 out of 5 sometimes. So what happened? I get to do what? I get to set my risk management based off of my what? Based off of my win rates. Now, if you actually have a win rate that is 40%, meaning that out of 10 trades, you're going to win 4 trades. What happened? possibility is that you can lose the first 6 trade. You understand? For possibility is what you can lose the first 6 trade. So if you are setting your plan, don't set like I want to lose 5 trades. Like I want to risk $20 stuff like you funded a $100 account. I want to be using $20 because if you use $20, you only have 5 trades to take to lose the $100. And if it's 40% win rate, meaning that what happened, you could lose 6 trade before the trade actually, like before you actually win one. It's possible, or you could be mixed win and losses. But most time it could be that what you lose 6 trades straight. But what happened, you are going to win the remaining 4 trade. So if you now actually start risking $20 on $20 in an $100 account, you only have 5 times. Now that you lost 5 times, you don't even have more time to try because you have a 40% win rate. But for me that have a 60% win rate, what happened? I can win 6 trade out of 4 trade. Meaning that what happened, in a row of 6 trade, I will lose 4 trade maximum. You understand? I will lose 4 trade maximum. So I can put that what happened. I want to reach $10 per trade. Putting it very, very okay. You understand? You understand? Putting me very, very okay. So that even if no matter how I lose, like no matter how I lose, I still am in the market waiting for that very win that will boost everything back to normal. You understand? So therefore I can set my own based on the fact that what happened, I have 60%, 70%, 80% win rate. What happened? I can set my own that what happened, I want to risk $15 on each trade. If I'm missing $15 on each trade, I have like 6-7 times, you understand, to trade that particular stuff. And since I will only lose 4 trades, even if I lose 4 trades, I'm seeing the market waiting for that value one trade that what happen can change the whole account and change the whole trading for me. I don't know what I'm trying to say. So when you are setting your VIX plan, what happen? Look at your win rate. What is your win rate? Then get to set it and see that okay, out of this very trade, how many trade am I going to lose before I get to lose the account? Then what happen? You get to now look at how you get to divide your how to get to divide your risks, how much you risk per trade, so that you don't get to lose your whole account, your total account. That is the best way to do it. Now, and in the other part, risk management, like I said, is beyond just your loss size. It's beyond just even the money you lose. It also in drawdown. Now, how much am I going to lose this particular day for me to stop trading? You understand? Like now, I funded $100. I'm looking to just lose only $20 a day, and I'm out. Like once I lose 2 trades, I'm out. Like I'm no more trading for that very day. If I lose 3 trades a day, I'm out. I'm no more trading for that very day, because I know myself. Once I lose 2-3 trades a day, you understand, and I continue trading, I keep on losing. Because my psychology is already affected. So you need to know how many trades per day are you going to lose. This is not about theory. This is practical stuff that you need to do. You understand? You need to apply them in order to become consistent in the market. Number 6 is upping into different strategies. Now I've said a bit of it before, but I'm going to be elaborating on it again. Now I had a student who was so zealous, like he was so zealous about making money, like he was so serious, he was so like he wanted not just even making money, he wanted to know how to trade, he wanted to know this market so well. And what happened, I was teaching him particular stuff to do, you understand, my own strategy, what I know how to trade, you understand. I was teaching him exactly, but what happened, because he wanted to know more, he watched audio video, he attended classes, and still went ahead to read different PDFs, different books, different videos, different mentors. You understand? All those stuff. You may think you want to acquire different knowledge, but what happened? You are killing yourself. You are killing yourself because you are complicating everything. You are mixing indicator. You are mixing price action with SMC. You are mixing everything. When you now get to the chart, what happened? You begin to see different things that don't really align. Trend line goes with zone, makes a better strategy. Like liquidity goes with break of structure, makes a better strategy. Now when you mix all this stuff, when you get to the chart, you become confused. And when you become confused, you begin to do things, you begin to mix this up with this one. What happened? You don't get it accurately. And one thing about mastering different stuff is that you don't really get to be perfect. Like, let me not use the word perfect, but you don't really get to be so good at that very stuff, because you are learning a lot of stuff at the same time. You are not going to master that particular stuff. They say a jack of many trades is what happen is a master of none. So therefore, you have to limit yourself. Like, if you are going to get a mentor, because one thing I always say is this: you can learn a strategy like so well from YouTube. I don't know if I get what I'm trying to say, but you not sticking to a mentor will affect you. Now, just get the point I'm trying to say. You want to learn price action. Most people don't know the topics to learn under price action. You understand? You get to watch this very mentor teaching trend line. You get to watch another mentor teaching liquidity. You get to watch another mentor teaching indicator. You get to watch another mentor. You understand? Like, you get to watch different mentors, thinking that it is the same forex they actually do, and therefore you doing all those things, you're going to make money. But that's not the truth. You are mixing up everything together again. But when you stick to a mentor, you stick to that particular strategy that is working for him, and that very stuff actually works for you, because you definitely are going to become a master of it over time. Number 7 is thinking like a pro, having the mindset of a pro. I know you are just starting out in forex. I know you are probably at the point of, like, you are actually at an average point in the forex market. You understand? But you can think like a pro. You can think as though you are so successful. Now, how do you think, or how do you act like those already successful in forex? Now, this is how you do it. You don't chase trades. You don't chase the market. That's how pro behave. When they get to the market, they do or they execute what they see. They don't try to form an opportunity in the market. Not like most of us. Most of us want to trade. Like, we cannot do without pressing the phone. We cannot do without pressing buy. We cannot do without pressing sell. Like, you have to be so calm. Don't chase the market. Wait for the market to come to you. Wait for price to play out that very strategy of yours before you get into the market. Don't try to trade every time. Wait patiently, and price is going to definitely give you that particular entry you've been waiting for. So therefore, if you really, and this very stuff, it helps you to reduce emotion. It makes you so calm when trading the market. Like, this work so well for me. In fact, I consider it as one of the most important things that helped me to become profitable in market. Like, I consider it as one of the very, very important thing, because when I get to my desktop or my laptop, whichever one I'm using to trade at that very point in time, what happened? I sit down, I become so calm. Normally, I told you I used to wake up early, understand? So I become calm. Like what is actually happening in this market, understand? Like, I'm not that eager to rush into a trade. No, I'm just calm, because I know that definitely either today or tomorrow, price is definitely going to do what? Going to form an entry for me in my own strategy. So therefore, I'm calm. I don't know if I get what I'm saying. So you need to be calm. You need to have that mindset of a pro. You need not to chase trades. You need not to chase. Like, you need not to be so addicted in buying or selling. You need to wait for that perfect opportunity so that your accounts can remain safe. Also, the mindset of pros is trusting the process even when on losing streak. Now, most of you may think that I don't make loss, but I do. Most of you may think that very mentor of yours, that you carry him so much, like maybe even as a god, like God of Forex, you think he doesn't lose, but he loses. Like, you understand? He loses some trade. There's some certain time that you actually have losing streak. It may be once in a year, it may be once in 2 years, it may be once in 5 months. But the pro believe that what, even though they are at losing streak, their strategy is still accurate. It's just that probably there was a change in market, in the way market was behaving. Probably they may be tense at that particular point, you understand, but they just know that what happened, their strategy is still accurate. When I mean losing streak, they lose for a week, you understand, or they lose for 5 days consistently without even making a win. That is losing streak. But they still believe that what happened, it is still accurate. And what happened, those pro, what do the pro do? They go back to their trading plan. they look at it, what is actually going wrong. They look at their mentals, they look at their psychology, they look at how calm they are, they look at some certain stuff. What are they facing physically? What are they actually facing? You understand? For them day-to-day activity that is actually affecting them emotionally, psychologically, then they get to adjust. They don't believe that what was making them making money is actually has actually gone wrong and is now making them make loss. No, they believe something actually happened other than that. You understand? So think like a pro. Don't get disbalanced. Continue doing the same thing. Continue trusting the process. That strategy that made you $100 can make you $1,000. That strategy that made you $10,000 can make you 100K. So therefore, believe in the process and try to check what really happened so that you can adjust. Those are the stuffs pros do, and that's what actually changed the game, different from the beginners. Now the very last point is a very interesting one, and it is a challenge. I'm challenging everyone watching this particular video to trade one strategy, stick to one strategy, risk properly, like know how much you are going to risk. Is it 10% of your account you are risking? Is it 5% of your account you are risking? Know how many percent you are risking on that particular trade. I challenge you to also journal your trade, and I also challenge you to stick to not over trading. Like, I challenge you not to over trade. I challenge you to be composed. Journaling is like you're going to write down the trades you took, the risks, if it was accurate, you understand, like how your emotion was, like how balanced it was. Like, journal everything, you understand. And once you see that what happened, you actually made a lot of mistake at that very point, what happened, you get to correct it in your next particular trade. And when you journal again, you see that you make another mistake, what happened, you get to correct emotionally. If you did not stick to your strategy, you get to correct it again, and all those other stuff. Now, if you are in for this, if you're in for this challenge, I want you to comment "I'm in the comment section, and let's get this moving. I hope to see every one of you so successful and so rich in the forex market. Thank you. Let's go make the forex market.